The chart today comes to you from the New York Stock Exchange floor.
I was actually in New York last week. I'm now down in the Bahamas this week. It's Thursday, the 4th of May. And we had that interest rate rise from the US yesterday, 0.25%, pretty much what was expected. So no big surprises there for the market. And we're seeing a fairly mixed picture on the screen. The big news at the moment, of course, is what's happening to banks. This is the regional banks ETF in the US, and we can see it's making new lows. So there's more bad news to come on banks by the looks of things. And of course, if we hit the T key, you can do this on any chart and Updata, of course. We hit the T key, and we see we've got downside targets some 6, 7, 8% lower, and another one a massive 88% lower. But for the moment, there's further downside, and we will see more banks fail. And some of the individual charts are looking quite scary. So that banking crisis, that news is not going to go away. But the interesting thing is the market is pretty much taking it in its stride, the main market. So let's have a look. So first of all, the dollar did fall yesterday. No big surprises there. Interest rate rise is what was expected, and so the dollar fell away there. This 101 level is now pretty critical. We touched that on the 26th of April. Yesterday again we touched it. That's the key level to watch, and 100 is the ultimate level for us to keep an eye on. We have activated this downside target, so that is really significant on the longer term chart. This is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market. So for the moment, the dollar is just holding on. The euro is above that 110 level, 110.56 at the moment. Has touched 110.90, and we have activated an upside target. Not through the cloud yet on the lagging line. If we look at sterling, sitting at 125.66, looking stronger there, and actually nudging multi-month highs now. We're sort of back to where we were a year ago. So really quite significant that sterling is regaining their interest rate expectations in the UK quite high. Sterling euro sitting at 113.64, just again off the lows that we saw a few months ago, but not actually making. We did see 114 touched earlier this month. The Aussie we're seeing against sterling 188.34. I've still got a trade on here which I'm expecting to close out in the next couple of days. It's been quite strong. Did touch 190, but this trend just hitting this week. We're seeing just hitting some at that 190 level, just a push too far. Bitcoin sitting at $29,000, can't quite get back above the $30,000 mark, but still looking pretty bullish on the medium and short-term charts with upside targets there. We look at the Nasdaq sitting above 13,000. Just can't hold on to that 13,250 level, but it has made higher highs and activated upside targets. But if we look at the S&P, we've really struggled to break through that 4,200 level. So that is still a concern for the US market that we're just not managing. And we're staying bearish below the cloud there on the weekly, as we are on the Nasdaq as well. FTSE future sitting at 7,760 this morning. Just again looking like a lower high after the Feb high, which is a little bit of a concern. We've had strong results out this morning from Shell, and BP's results were also good, of course. So the oil majors have been driving this general trend, but interestingly, we're just seeing some short-term weakness there. The DAX in Germany down 1/3% as well, just really aimless, not going anywhere this last week. And if we look at Asia, Japan, little change. The Hang Seng up 1.2%, not enough to change the picture really, still bearish on all three time frames. And if we look at the Sensex in India, up 0.5%, starting to look better there on that daily chart above the cloud, and the weekly, of course, looking strong with good long up targets. So that's also pretty good news. We'll look at the energy mix in a minute. Looking at this gold chart, we're sitting above that 2,000 level now for the longest time really that we've seen for a while. So really gold is really just holding on to those levels. We've got upside targets of 2,100, 23.46, and a lot of people talking about 2,500. So at the moment, it's hard to see targets beyond that 23 unless you go to bigger box sizes. Silver holding the 25 level, 25.50, so that's good news for silver as well. And if we look at US 10-year yields, sitting at 3.36%, a little volatility in the run up to that Fed announcement this week, and we are just lower there. That 325 level quite key. We do have this new upside target to 4.2%, which and 4.25 on the 0.5% chart. These not yet activated. We need to break to new highs to do that. But whilst we're above the low point that we saw of 325 in April, those targets will stay and train. And so inflation numbers are going to be pretty important to watch in the coming weeks and months. And so that's quite key. Apple holding on to that 160s level, so looking pretty strong there. Still the bellwether, of course. Amazon have not looked as good. We're seeing here still bearish below that weekly cloud. So that's quite key as well. Now looking at the energy mix, we've got Brent crude up this morning. It's really dived lately, so we've seen that fall. We've been bearish most days this last week or two, and we've really just plummeted away there. This morning we've gone out as neutral. We have a new upside target. Looks like we've hit a floor. These longer term targets on the 0.5% daily now being met. You really can't ignore those, but we've got new upside targets. So we may have had a floor. The 70 level is really critical for Brent crude, and WTI 65 is the level there. And again, this morning looking a little bit better, having just recovered off that low. So 65 for WTI and 70 are the key levels. Emissions dived yesterday, diving lower, having had that jump. And really new lows are bad. We've gone out as bearish to clients this morning in our morning call with the targets, and you can see these on the 1 minute chart as well. Looking at TTF, it was up 1% this morning, but we still went out as bearish because we had these downside targets and we're falling away to new lows. The same with MVP, down 2.2%, again pushing to new lows there. And if we look at German power, the CAL, we're seeing here back below that 145 level. The range of 140, 150 is really what we've got to watch. A break below 140 would be bearish. We've gone out as bearish to clients this morning. We've got this downside target, which has already been met. That's it for today. Until tomorrow, happy charting. Bye for now.